Hello and welcome to Trade the Trend. My name is James Boyd. We welcome you on this Thursday. Last Thursday was my 29th birthday, so this is the 1 week anniversary of that. A little fun there. I was just looking back on the playlist we did from last week. I'll share it in just a moment. Fayez, welcome to you. Don, Life in the Fast Lane. David, Bill, Ron, Jerry, Jay Richardson, and many others. Welcome to all. We also have Brent Morris in the chat who taught on long verticals this morning, so we welcome him as here as well, fellow instructor. And just remember, you can find Brent or myself on X. Just always remember that with each of us coaches, our first letter in our name is capitalized, and our first letter in our last name is capitalized CS. No other variation, okay? So a quick reminder on that. Now, just real quick as we get started, remember that when we talk about a portfolio here today, we'll talk about it in terms of like doing stock investing or trading. Occasionally, we will also bring up options. Remember that options are not suitable for all investors. There can be a high level risk, and there's different option strategies. You also want to understand that you might learn about different option strategies, but you might say some don't interest me, or options, I'm not going to do those. That's fine. You just make an informed decision. Also remember the investing, when we talk about the information here, it's provided for general informational purposes only. Remember that investing involves risk, including loss of principal. And also when we talk about, here we are in America, our example trades that we do are American style options, at least the ones we show, okay? And when we talk about short options, those could be assigned at any time up to expiration, regardless of the in-the-money amount. So that means if you did a covered call, they could take the shares prior to expiration. Or if you sold the put, you could be the buy the shares prior to the expiration. Okay, so that's what we mean by that. So that just having an idea of that could happen. Okay. Also remember when we talk about option Greeks, know that they measure a sensitivity to something, as stated there. And I also want to give you a quick heads up that this weekend we're going to be in Denver. Many of you might be going to that. If you're in that neck of the woods, Ben and Kevin Horner will be there. I'll be running the ETF class solo tomorrow, okay, as Kevin is at the in-person event. So join us at the ETF class, which is not recorded, tomorrow morning at 9:30 a.m. Eastern. Now, after we're finished with Denver, which is this weekend, starting tomorrow, we'll be out in Anaheim for the Advanced Concept Workshop, the Miami Market Drive, okay, June 13th, which is a one-day event, and also going to be back in New York at the Market Drive, and you're going to see that's at the New York Marriott Marquis. That's Midtown, it's not Manhattan, and so just join us there. You can also see other events, schwab.com/events. If you're a Schwab client, you could go there for free, okay? Now, let's go ahead and get started. So what I want to do here is just kind of take a look at where the markets are. Now, we can look at the charts, we can look at the data. I want to kind of just look at the data for just a moment, okay? So when I say look at the data, I'm talking about really taking a look at, let's say, I'm on the Market Watch, and these are the column headings we talked about. Now, if you didn't see the script class from last week, go check it out. I cover for Michael Fairborn, so we talked about some of these headings. Now, what I want to kind of do is, if we look at just the indexes, okay, the index list, one of the things we want to look at is the area that's actually been quite strong is the NASDAQ, okay? When we look at the relative strength, that's the one that's been the strongest compared to the S&P 500. That is the only index which is in the green, okay? Now, if we look at, let's say, the Dow Jones, you're going to notice that it's up about, if we're talking about, well, what about today? Well, it's up 200, about 0.5%. NASDAQ up 1.63. Microsoft and Meta helped them out quite a bit. Russell's up 0.5%. SOX is even up 1.74, which is kind of interesting considering that some of the earnings on the semis haven't been great. And that has been a space in the last month where you have been seeing some buying relative to the S&P, okay? And what you're now going to notice is when you look at the moving average columns, they're green, not a surprise. And you're going to see at the breakout column, there's a lot of today breakout, continuing the breakout, today breakout, right? So there should be kind of some things going on here in terms of actually seeing strength. The one thing that also kind of stands out to us that we've been watching week over week over week over week, well, you got gold soft today, okay, which is not necessarily horrible, okay? people ran to gold because equities were struggling. And then we actually, Swiss franc, which is kind of slightly under pressure, or we would say under pressure, down by 1%. You don't see really currencies move that much because people are trading on a higher nominal value. Okay, down 1%. Japanese yen almost down, blasted 2%. So if we kind of said, are the fear gauges going off? And when I say the fear gauges, I'm saying VIX, gold, Swiss franc, Japanese yen. No, fear gauges are not on right now. Okay, not at this moment. Okay, now you might say, well, my fear gauges are on. Okay, you got to determine are you going to trade the chart, or you're going to trade the feelings, and we've talked about that. Now, if we look at this chart, I want to kind of just start off with what some of you might be thinking. James, I sure like the SPX a lot better when it was at the high of the trading day. I know how you feel, okay? Now, if you ever talk to yourself, and by the way, they say that if you talk to yourself, that's a sign of, someone being pretty sharp, okay? And there's nothing wrong with talking to yourself because you're the sharpest person you know. There's nothing wrong with that, okay? Now, they said it would be damaging if you ask yourself questions and you answer yourself back. They said there is maybe some risk with that. So just don't answer yourself back. Now, a little fun with you there. Just want to make sure we have a live audience here today. Now, the big thing is when you look at the SPX, we've been in this situation of these green shaded moving averages, okay? This is really the common denominator if we're trading technicals of what we're trying to really see, a rising moving average lines, and the moving average line is green and a green shade, okay? There's a green shading when the 10 is above the 20, in other words, okay? So that's important, but if you actually see both lines up and the line is green, you would actually have the green shading anyway, okay? So SPX sitting there, NASDAQ, you're going to see that that's the one that's gone up the most, okay? Now, I went back and checked on the day, okay? Liberation Day, technically Liberation Day, verbally stating it was Liberation Day. They hadn't seen anything yet. But what you're going to notice is Liberation Day was the 2nd, okay? And really the tariffs kicked on, or at least kind of escalation of tariffs, raising the tariffs. That's when you actually start to see the 3rd. More escalation of tariffs was the 4th. More escalation of tariffs was the 7th. Now, what's kind of interesting about this is the NASDAQ has gotten above the Liberation Day. Kind of interesting because they, like I said, they haven't announced a single one yet, okay? So that's kind of interesting that when new information came to the market, some investors, A, got stomped out, or B, chose to get out, okay? And I'm not saying, the investor traded to the plan, but overall, what you're going to see is some investors say, look, maybe it's not as bad as feared. And sometimes that can be the case, that it's not, sometimes. And you also got to understand is they could have said, look, I'm going to take some of my capital and kind of go elsewhere a little bit. The one thing I will point out here today, we do see the dollar firming up a little bit, the US dollar, which had really crashed during that time when the equities fell. So seeing the dollar firm up a little bit could be a positive sign for maybe US markets. Now, I'll just say this, if we look at the Russell, I don't have anything to say besides it's still lagging. And if you look at the Dow Jones itself, it did break out of that little ascending triangle pattern. Again, we like it, or you might say I like it better when actually we were at the highs, noted. But this being a red candle so far doesn't necessarily mean the trend changed, okay? Now, if we take a look at this, I want to go back to just real quick the sectors, okay? When we actually take a look at the sectors, pull this back up, and what I'm going to do is just pull that right there. Now, if we look at this, the comment from Wiley was when we look at the trend column, okay, the trend column, there's not many things that are not in trend 3, meaning above the 10-day moving average and the 30-period simple moving average. You only have healthcare that is struggling. You have energy that has somewhat struggled. Crude oil went down to 57. That matters, well, because they're selling oil. And if you take a look at this, we see gold that is in a trend 5 condition. Price fell down below the 10-day moving average. And what does that mean? That means that gold has been losing some momentum, as we talked about last week. Now, probably the standout, this column trend, this is on the daily chart, okay? Now remember, if someone kind of said, when do you tend to notice that the trends might be better at that point in time? Trend 2 at the minimum to 3, okay? Now, a lot of investors might say, well, James, what about the weeklies? Is this just some daily chart movement, or are those up moves starting to kind of, kind of push back up to where the weekly charts are starting to get a turn? And the answer is yes. SPX on the weekly chart, we see discretionaries, we see utilities has been quite strong still, staples has been quite strong, technology, and then you look at financials, industrials, basic materials, and you look at real estate, and you look at communications. Now, sometimes people think that the stock market is socialism and that everything needs to go up. Wrong. It's capitalism, okay? Not everything needs to go up to verify an uptrend, okay? So you need to understand that. I know some people say, well, everything should be fair. No, it's not. Some sectors actually do better than others. Some companies will not survive, okay? It's been like that for the last 100 years. And when we talk about capitalism, some companies, they're going to put other companies out of business and try to take their market share. Welcome to capitalism, okay? Now, if we take a look at this, okay? So when we look at this, and this kind of goes back to the question which is asked, how do you pick stocks? Well, first off, when we actually looked at what we saw, the NASDAQ is one of the leaders, followed by the S&P, followed by the Dow. So finding stocks in those three areas probably not going to be super tough. And then if we talked about, let's say, which stocks maybe has, let's say, a bounce or a breakout. If we said bounce, it's really one of the bounces is coming in utilities. We actually see a little bounce actually also coming in, let's say, technology. And the breakout is actually also happening in, the bounce is actually in staples and utilities. And the breakout is really happening in technology, which is not surprising considering the NDX, okay? So this is how some investors like to kind of look at this data. So that way, when they look at the charts, they kind of have an idea of what's really going on, okay? Now remember this diagram, right? You guys remember this diagram? The expected return, I'll put ER, and let's just kind of put over here the volatility symbol, okay? Now, let me kind of, clean it up. Now, remember, can anyone tell me if investors are kind of, let's kind of imagine that this is if someone really thought the market was going to go up, right? What areas do they tend to get in? They tend to get in the T for technology. They tend to get in the Y for discretionaries. They tend to also, I'm going to add the communication, okay? And if we also said maybe what's another area that might be pretty interesting in terms of trading the trend? Well, we would include some of the energy and materials. Those on a percentage basis tend to move more. But if we kind of said, where do they tend to get it? It's tech, discretionaries, and communications. Don't worry, we're coming. If we said, well, what about in the middle? Financials, and for financials, okay, industrials. When I say industrials, think also transports. And if we see these areas like ULAG, utilities, healthcare, V for healthcare, R for staples, and if I did RE for real estate, if these areas lag, that's okay. They're supposed to typically lag because they're not growth areas typically, okay? So if investors are more confident in terms of what's happening, they tend to move out further here on the tree and try to attack those growth areas, okay? Now, good thing about growth areas, they have higher potential growth. The bad area about growth areas, well, if they don't hit the targets, okay? If things happen in the economy that slows those down, things like that, they can go up and down a lot, okay? So if someone said, hey, James, I'm not very good at exiting, I have no clue why somebody would actually go look at technology, discretionaries, and communications if someone says I'm not good with exiting, because they go up and down a lot. Okay, now, let's kind of just bring up, now, we talked about also Bitcoin, okay? And we talked about these companies, example given, Palantir and actually MSTR. We said, hey, these companies, they chose to have some of their cash in Bitcoin. Palantir was one of the first ones we saw that actually broke out And it's just been riding a nice little move to the upside. Kind of makes you feel bad for the people that didn't look at the balance sheet to see what was on their balance sheet. And remember, we're talking about investing here. We're not buying rubber duckies, okay? Soap, okay? We're looking at companies and what do they have exposure to? If we saw Bitcoin actually go up, which it was up about 2,500 here today, Palantir actually has exposure to that, and MSTR has exposure to that. Well, when Bitcoin actually started to break to the upside, one was more of a diagonal break, one was more of, let's say, a horizontal breakout. Lesson learned there. Know what they have exposure to, because that could actually mean potential profits, okay, on their income statement, or higher values on their balance sheets, okay? Now, so any change there? MSTR actually today has earnings. Now, someone might say, James, based upon kind of the moves that we've actually had there, I'm going to profit take, evaluate that reward to risk, how much does someone have left, but it is earnings today. Now, when we actually pull this back up, let me bring it back up. Let me kind of just see just real quick, any exposure still to that stock. So the answer is, let's kind of talk about this, okay? Let's evaluate together, okay? Let's think logically, okay? And so what do we actually have on this position? We have a 320 put, and we have the 315. Now, we would wash, or I should say wash, as we say down south, wash your mouth out with soap. And if we said, oh, we're at 396, there's no way that we could go down to 320. That is one of the foolish things that we could say. That's why we wash our mouth out with soap, okay? If there's time remaining, it could give it all back and close below that, and all of a sudden that gain is gone, okay? So do not be that person, okay? You ran into that person and there's no way. Yeah, there is a way, okay? You got time left? There's a way. There's a chance. Now, the question is, should we get out? Okay, how much is left? Let's go up to the very tip top. Let's go to the settings gear. We're going to go to application settings, and we're just going to take a quick look. This kind of helps us see our positions. I want to do not day open for this moment. Let's go percent open. Why? Well, because on these spreads or short options, it's helpful to kind of really see what percent do we have. So if you take a look at this, we have 87% of the maximum gain. You can only get 12% more, but then you'd be risking 87 and you would be risking max loss. So for some investors, they might say, James, what, foolish to stay in the position. How do you close it down? We're going to right click on it. Now, by the way, when did you get into the position? Okay. And click on that. When did you get in the position? That was last Tuesday. Okay. Now, if I went back and said, let's kind of see where that was on the chart so we could kind of see where was the entry. And I'm going to put a bubble on it. The 22nd was right here. Now, we could have said something like, and we did, okay? We could have said, like, it's too high. Or this 341 is acting as potential resistance. Look, those are good comments, but you're kind of like neglecting the fact that you just broke a major diagonal resistance line. So this is where the entry was there. This is where the exit was, 87%. That trade is over. Not going to roll the position. Now, here's the thing. If we close this position, we get past the earnings, see what the reaction is. If Bitcoin continues to go to the upside, Monster, they could actually, MicroStrategy, I should say, or MSTR, they could benefit potentially from that. Now, the thing that we don't know is, are they counting that maybe the unrealized gains in Bitcoin, are they counting it on the income statement, which is probably pretty likely, or are they counting it on the balance sheet as other comprehensive income? It's doubtful on that. So if Bitcoin goes higher, the fair value of those assets on their balance sheet go higher, and then people look at it and say, could the company be worth more because the asset values went up, okay? So that's kind of something to kind of maybe dig into, but we probably would speculate that it's probably the first, okay? That as if Bitcoin actually goes up, it's affecting the values of the assets and it's inflating the stock price to a degree. And people are also playing the correlation, Okay. And by the way, we said those are two companies that had made that decision to do that. That's why we did the examples. Now I'm going to go back to the trade tab, confirm send, going to shut the position down. Now the one thing is I want to kind of see just real quick is, let's go back to this trade tab. There it is. Right click on it, create closing order, buy it back. Now when we buy that back, we got in for a credit, okay? And now we're getting out for a debit, which means we're giving some of the initial credit back. But if we stayed in the position, the most that we could make left is 21 cents. So you got to ask yourself, would you stay in at 21 cents a contract or 42 cents total? Would you stay in for 42 cents and risk the 319 or the 318 and max loss? And this is where we get to where the reward risk doesn't really make any sense anymore, okay? You're risking way more than you can even make, okay? Now, note the commission there as well, okay? Send the order, and there it is. Now, I want to go back, just kind of double check, do we have any position in Palantir? And lo and behold, it does. I think this is the second position we have in that Palantir for the paid money count. It doesn't need to be changed there. It's still the 95.90 short put vertical, and it's at 36%. So the cookies are still in the oven here. The first position I think we rolled, and this is the second position, okay? Now, I want to kind of also go back to kind of talk about some of the stocks that are in the paid money portfolio. One of them that I at least want to address a little bit before, and I'm going to look at the questions here. I'm going to go back to the day open. One of them that was kind of moving around, okay, is we have the position of all, and there's 100 delta. Now, let me kind of give you a little quiz, okay? If you had 100 delta, but the gamma said 0, theta said 0, vega said 0, then what type of position is it? Without even expanding it. What is it? Okay? Now, stock is down 284 today. I'm not going to open it because I want to see how many of you can get this. Now, if we go to the charts, what we're going to do is let's pull up all for just a moment. I'm going to pull up all and let's kind of talk about this position. Now, if you take a look at what happened today, the stock went down. It had earnings, okay? Now, it's down 284, okay? It's down 284, or in other words, 1.43%. I mean, did it crash? No, okay? Now, is there maybe a little missed opportunity here, okay? Well, some investors, what they like to do, if they have 100 shares, if the investor did not adjust the position in any shape or form, they didn't buy a put for the stock, they didn't collar the stock position, they didn't sell a call for the position, why would the investor go in over the earnings with 100 shares, period? And I just gave it away, okay? That position is 100 shares of stock. Why would someone do that? Well, they do that if they actually said, look, I want to kind of see if the stock can gap to the upside. It did. Stock went down a little bit. Now, I want to go back and kind of look at this position, okay? Now, I want to pull this chart up on a different view. And if I look at all here, some investors might say, James, when might the investor consider maybe altering the position? Now, when I say altering the position, they might say, hey, look, all is still bullish, but it's kind of maybe neutral a little bit. They might be saying, James, could they maybe consider a covered call? Well, let's talk about how hard that is to do that. Well, if we go back to this, what I'm going to do is on this trade, we have 100 shares of all, and it gave back a chunk of those gains, unrealized gains. Now, it's hurtful, okay? It's hurtful. Could have told us it was going to go down before it did. Now, the one thing, if you take a look at this, is all, here it is. We got, if I looked at the June expiration with 50 days, now why not the 16 May? It's too short a time, okay? You only got 15 days left. For our example, we're looking for a minimum 20 days, okay, to 50 days-ish, okay? That's in the range we talk about. If we look at selling the strike out of the money, well, out of the money just means higher than now. The first strike is the 200. Well, if we look at the bid-ask spread, it's 450 by 510. That's pretty wide, but there's only been 6 contracts in the world traded today. Which, how do you know that Allen didn't do all 6 himself? He could have, okay? So when there's not a whole lot of liquidity, which changes from day to day, the bid-ask spread can widen out. Now, what I'm going to do is I'm going to try to get maybe somewhere in the middle. If we said somewhere in the middle, it's going to probably be right around 475, and that's why you see the mid there, okay? Now, if there's only 6 contracts traded today, okay, and we do one of them, now this should turn to 7, hypothetically, if this is real money. But if we take a look at this, we're going to sell a call, and we're going to actually, in this case, try to collect 475. Now, the mid price changed by a nickel. I'm going to try to squeeze another nickel out of it to get 480. Confirm and send. If we had shares, we sell a call. This turns into a cover call. What we're now going to do is sell it. Now, why is the paper money account doing this? Well, it's kind of like in a little sideways range. Now, James, wonder if the stock goes up, though. Well, we agreed to sell the shares at 200, but if we also get, 480 on top of that, it's likely we would get up to about, let's say, right about that price. This top line that I'm pointing to, that's the maximum gain. We're agreeing to sell the shares for 200 from now until expiration, but you got to give us the premium too, because we wouldn't commit to sell the shares from now until expiration unless they were bringing luggage or a briefcase with them of cash called premium, okay? So that's the thing people say, the comment like, well, investors, they don't need to have a minimum required premium. Well, why would you agree to do it for free? Do you go to work for free? I don't think you do, okay? There's usually a minimal acceptable threshold that you're wanting to get, and some investors, they want a 1.5%, 2%, okay? And that percent is really based upon, and if we look at the numbers, how we run them, if we got 480, and let's say we bought the stock at 190, well, 480 divided by 190 is about what we bought the stock for. That percent for this is 2.5%, okay? 1.5% would be lower, 2% medium, 2.5% higher. And the biggest thing that's going to make the determination of what percentage it is how much time to expiration and how volatile it is, okay? Now, when we also talk about this percentage, we're referencing picking an out-of-the-money strike. In other words, a strike with a delta of 30 to 40, okay? So that's giving a little bit more context to that number. Now, all I did there is I'm going to go ahead and actually send that order, okay? And let's bring it back up. And did that trade fill? Yes. 100 shares of stock, okay? And sold the call. Now let's go back to this and I'm going to go to questions. Now, one of the things you're going to probably notice, or probably should have noticed, is when we do a cover call, it actually brings down the delta. Now, what does that mean, brings down the delta? Does that mean you're as bullish as you were before? Well, it can't mean that because we just agreed to sell the shares for 200, okay? So we don't have that upside potential right now. So the answer is, if the delta drops, the position is not as bullish as it was before. Second, it also actually pushes down the delta on the portfolio, okay? Now, if we do sell the call, you're now going to notice that there's positive theta decay, okay? Decay. Now, here's the deal. If the whole entire month of the S&P 500 just went sideways, and many of these stocks mimicked what the indexes were doing, now we don't know, okay? But if 30 days goes by and that theta decay, which Brent talked about today, that could be $1,000. Now, we don't know how it's going to play out. And you also got to remember is this number is not going to stay stagnant. This number could increase as those option positions go closer and closer to expiration. Now, it's not all fun and giggles here, okay? The theta could be numbed a little bit by what happens with volatility. So this is not like, oh yeah, guarantee that 30 days goes by, we should make about $1,200. Now, there's other variables in here, but the run rate right now is about, let's say, 43. And this kind of tells you, do we have more buying options or selling options? The answer is we've sold more options than we probably bought, hence positive theta. Okay. Now, other questions? Other questions? Yeah, so Sia mentions ice cream melting. Now, let's kind of talk about ice cream melting for just a second, okay? Now, one thing we're going to do is we've got a couple stocks. Now, what companies today have earnings? Now, sometimes when people talk about earnings, it's almost like a bad thing. And I think for many people, they kind of maybe readjust, like earnings could be a good thing, okay? It could cause interest in the stock itself, okay? Now, there's a small company we've never heard of before. The ticker is AMZN, okay? Never heard of them before, okay? And what you're now going to see is they got earnings today. Now, I want to go back to this theta discussion for just a moment. And what you're now going to notice is Captain Obvious says, James, we're at resistance. Now, what do you think might cause some investors to maybe try to get in the stock? What do you think might cause an investor to try to get in the stock? If the stock makes a new low, is that maybe someone's entry signal? Maybe, doubtful, okay, but maybe for some. A lot of investors might say, well, James, I get in when that stock or if that stock could break out, make a brand new high, and then yank back, and then let me get in, the investor says, closer to that 191. Now, as we say that, it kind of sounds like, well, that's easy. Or they should wait for me. Okay, you can't just leave without me. yeah, they can. Okay, now, some investors, if they're kind of more confident maybe in what the direction is or willing to take the risk, they can just buy it right here at resistance. So the higher the NASDAQ actually goes to the upside, the higher the Meta goes up, the higher the Netflix goes up, the higher the potential Apple goes up, and so on, it could drag up Amazon as well, as this is one of the stocks that has higher liquidity. Okay. Now, what I'm going to do in this case is let's go back to when we talk about picking strategy. And I've seen a lot of questions on this today, especially in Brent's class. And Brent addressed it, but let's just kind of talk about it. Now, the big thing is when we look at, let's say, the expiration, if someone is trying to play implied volatility, they're probably looking at trading something that might be very, very short-term in nature. They could try to. Now, we're not going to go to the 1 day to expiration, but we're going to go to the 16 May with 15 days. So a lot of questions have been happening about, well, picking a short put vertical versus a long call vertical, okay? Now, how many of you are not sure if that stock's going to break out to the upside? How many of you are not sure? And how many of you, if you said that, I'm not sure, would say, James, I would like a higher probability-based strategy, one that also is trying to gather income from time decay. Well, then many investors might consider the short put vertical, okay? Now, if the investor says, look, you only live once, and I am more confident, the investor says, about the direction. I don't care as much about the time decay. I want a higher potential profitability. So if you go the long call vertical, you are really saying, look, I don't care if the break even's higher. I want more potential upside. So notice the sentiment differences between the two types of investors. First investor, we're going to actually we're going to look at the strike prices. And if we said, look, we're going to sell the 180. The 180 has a 28 delta. The 28 actually telling us the probability approximately the stock being at 1 penny below that strike at expiration. It's also saying if the stock moves up or down $1, that first dollar move would be about 28 cents on the option price. We're going to right click on the 180, sell, and then vertical. Okay. Now this is where having an understanding of break even makes sense. And you want to kind of have an understanding of the numbers. Okay. Now, if you take a look at this, if the investor said, look, I'm going to sell the 180 and I'm going to buy the 175, credit there $1.29. That's per contract. Now, the second part of this is when we look at the break even. The break even is at 178.71. So if that stock went down $5, might not necessarily be the end of the world, because in 15 days, if that stock is still above that price, we could still be above break even, okay, or should be, okay? Max profit, max loss. Now, I'm going to do both examples. When I say both examples, what do you mean by that? Well, we're going to do the 16 May, but we're also going to do the Junes, okay? So let's do this, okay? And I think this is where we kind of learn a lot and we kind of compare and contrast. So the example that we were looking at before was the 180 and the 175. And that was right here. And there's the credit that we just saw. Now, we're putting this in the margin account and the IRA. So what I'm going to do is, in this example, I'm going to go to confirm and send. When we go to confirm and send, if we go to single account, we could say multiple accounts, and we're going to put one in the margin, and we're going to put two in the IRA, okay? So in other words, just because we have different accounts doesn't necessarily mean the investor is completely changing what type of stocks or strategies they're picking, potentially, especially on a vertical in this example. We're going to send the order. Now, the other thing we're going to do so we can compare and contrast is we're going to go look at, let's say, the 180, 175 for the Junes, okay? Now, the risk about the Mays is if it goes down, there's not a whole lot of time for it to recover. Now, we had $1.29 really on the Mays, and we only have $1.50 on the Junes. Is anyone thinking, well, I'm thinking, gee, that's not a whole lot more premium. 21 more cents to go another month? How many of you are thinking maybe the Mays are just kind of like maybe a better example, okay? So now looking at this, I would have thought that maybe there was a bigger credit than that. In our example, we're going to stick literally with the 180, 175. Now, if I showed you that again, say, James, can you show me that again? Let's go back to this 16 May. Okay, there it is. And really, the Mays was 128. And what you're going to see is if I went back to the June, it was only 150. That doesn't seem like a whole lot of extra credit to go a whole another month. So we're going to stick with the Mays. Now, what I'm also going to kind of do is let's kind of go back to something just real quick, okay? One of the other examples we did just the other day was Meta. And let's go back to Meta. Let's kind of see if we need to do anything there. On Meta, you're going to see that we have a positive delta, bullish position, okay? Theta 5.75. Now, if you have positive theta, that means you sold something, okay? You have net positive theta. If you also have negative vega, you sold something, okay? Now, let's bring this back up. Let's go to setup. Let's go to open share. Let's go to application settings. And let's bring up kind of the percent open for just a second. Now, if I did this and I went back to Meta, followed this line over, that's at 71%. So is IBM. Now, if I pull this back up, what I'm going to do is when was this position placed? Now, this is not usual that in a 2-day period of time that a spread literally gets 70% in 2 days. This is not common. If it is common for you, I have no clue why you're coming to this class, okay? Because it's not common. We always kind of say that, look, if you can get to 50% in 10 days, that's like a home run. But if we get 71% in 2 trading days, that's like a grand slam, grand slam. Now, that must mean that the stock squirted to the upside and the paper money account got the direction right. Now, how many of you think what might cause an investor to say, I'm going to get in? Well, going back to what we talked about before, they might say, James, we've now broken resistance, okay? Maybe the investor thinks the price might go back to the upside. Now, by the way, Meta, they only had net income only of $16 billion. That's it. They only had $16 billion of quarterly profit. Now, don't worry. They were like paupers compared to Microsoft, who is at $33 billion for the quarter. So some of these companies, we just act like we just roll, oh yeah, it's 16 billion. Okay. That is a lot of money. Some of these companies, in terms of the amount of money they're making, is almost like some countries. Okay. Don't just put it underneath the shelf and act like no big deal. Now, the biggest thing is we're going to roll this position. What does roll mean? Well, roll in this case really means that we're going to take the current position that we have now and we're going to close it out. We're going to try to grab that 70%. Now, could that position have been up higher? And could we have rolled this position earlier today? Sure. Okay. Now, we're going to right click on this. Okay. And then what we're going to do, there it goes. Create closing order. We're going to buy it back. Okay. Got in for a credit and then we're exiting for a debit. Okay. Now, what you're going to see is, what's the debit? The debit is you're giving back some of the credit you received 2 days ago in this example. Now, we're going to go ahead and go confirm and send, and we're going to buy that back. Now, note the commission as well. We're paying the 90 cents or $90 plus the $1.30. Okay, send the order. Now, we went back to this position and say, why is the paper money account reloading the position? Well, we had 70% of the maximum gain. And so you kind of get to a cap gain strategy, like you have less that you could potentially make. And now what we're going to do is going to come back in and we're going to go look at, we had the Mays before, May 520 and the May 510s. Let's go out a little bit more, okay? Now I want to kind of look at where do we see the volatility? There is still a big premium on the May expirations with 58 days to 58% implied volatility versus if you look at the June expiration and it's at 44. Now, if someone says, James, I want to try to focus on the implied volatility, okay? Now, the comment was, JB, Meta gap up, but not closing price above the open, right? Well, so if that candle that we were looking at, that's a trend candlestick, okay? It fills in the candles. If we go back to this chart, which I'm showing you in Meta, this is really going to show you what that chart looks like on a regular candlestick. It shows that a gap to the upside, and there's probably a high chance of that, 90% gain, and then it faded back some, okay? So that's what it looks like on a regular candle chart that we normally look at. This chart that we're pulling up, it has the trend candles, and the reason why it's dark green is it's above both moving averages, okay? It relates back to what you see on the Market Watch tab. Now, what I'm going to do is I'm going to go back into this trade tab, and what we're going to do is we're going to focus really on the 16 May. Now, let's say the investor said, James, I think the stock has upside, but maybe some people profit take. Why do people profit take? Well, because they maybe had to go their intended direction. Maybe they think that stock might top out in the short term, perhaps. And so what we're going to do is we're going to kind of sell a little bit further down in the high 20 delta range. Now, that stock is sitting here at 573, and we're sitting here at 550, okay? Now, remember, there's a chance. We could close below that. We could go down, and the stock could be at that price level. Whatever the delta is, times it by 2, and that's going to give you the probability of touching. So there's over a 50% chance on this that we can come down to this strike and touch it. Now, wrapping up, what we're going to do is just roll this position. Sell, vertical, and what we're going to do in this case, let me just make sure that this is the 550 strike. Yes. Why do we pick that one? That's where the open interest was. Selling the 550 and then widening out the strike to 545. Why not the 547.5? Well, you got 559 and you got the 1547. So this is kind of showing you people are probably doing like $5 wide spreads. Some are doing $2.50 wide spreads. Seems like more are doing $5 wide spreads, as we can see the open interest tally. Now, what I want you to do
is I want you to practice. A lot of times investors say, look, when more volatile markets, I'm going to, some people say, I'm not going to do anything. One of the advantages of verticals, if the investor were to choose doing that strategy, is the delta is not as high as buying stock, okay? It can handle more price moves and have a defined risk. The only way a stock investor could say that is the stock has to go to zero. So I want us to practice these short put verticals, especially as we're in conditions where many of these stocks are going over earnings. Your homework assignment is to do a minimum of 3 of them. Minimum, okay? And that's what I want you to practice, short put verticals. Now, I'm out of my time here today. Give you a quick reminder, check out Brent's class tomorrow. He'll talk about more about advanced options tomorrow, and maybe he can even focus on some of these selling strategies and kind of talk about that probability. Now, also remember that with what we discussed here today, it was done for example, illustrative purposes only. Coming up next is going to be short verticals, pigeon right into that. And also remember that with what we talked about, all investing involves risk. Thank you so much for attending today's class on Trading the Trend, and we focused on more selling strategies on options. Thank you so much. Stay tuned for our next webcast coming up next. Bye-bye.